Hi my friends, welcome back to my channel. My name is Anna May and today we are going to be talking about what is a mortgage. I am going to break it down in very elementary terms, so I really want to make this as simplified as possible and I want to make this a quick video. I won't dive into the technicalities of a mortgage. I really just want to explain this very casually as if I were speaking to you as a friend giving advice for the first time on what a mortgage is and why you need one or how to get one. So yeah, let's go ahead and jump into it. If you aren't already, please do give this video a big thumbs up. I really appreciate it. And if you could also give my channel a subscribe. I do have a personal channel as well. If you're interested in keeping up with that, I'll leave the link in the description below. Okay, so let's talk about it. What is a mortgage? Unfortunately, this isn't something that I learned in high school, nor did I learn it in college, and I was a business major. This is sadly something that isn't really taught in the American education system. I really don't know why, considering everyone is most likely going to get a mortgage at some point in their life. So a mortgage is a loan. It's a secured loan attached to real estate property. So there are two different types of loans. There's secured debt and unsecured debt. An unsecured debt is going to be things like credit cards. Spend money each month using this credit card on things like food, clothing, and then you pay off that loan or you pay it off every single month. You're pre-approved up to a certain limit and you can spend it almost on anything that you want. Whereas a secured debt, you can't do that. And in this case, a mortgage loan is a secured debt attached to real estate property. You can't just get a mortgage loan and obviously buy things like clothing or food or shoes. It's attached only to real estate. Now there's going to come a point in your life, for example, let's say you're 30 years old and you're renting and you decide, you know what, I think I want to buy a house. I want to be a homeowner, and the first thing I would recommend is going and getting pre-approved for a mortgage loan before you go looking for a house, because a lot of the times we think we can afford something, but in actuality you might not be approved for the actual price of that home, just because there's a lot of things on the back end that we don't know as a consumer. So I would highly just recommend getting pre-approved before you go looking for a home. And you might be asking yourself, where do I get pre-approved? For example, you can go to Bank of America, you can go to Chase, or you can go to a different lender like Quicken Loans, PennyMac, Rocket Mortgage. There's a lot of different places you can go to get pre-approved for a mortgage loan. You'll have to fill out a mortgage application, you will have to get your credit checked, and you will have to send in all your income documents. After your loan officer reviews all of this information, then they're going to say, hey, Joe and Jill, you are pre-approved for a home sales price of this amount. Now let's say you're pre-approved and it's time to go looking for a home and you finally found your dream home and it's a sales price of $500,000. Now, unless you have $500,000 sitting in the bank, you obviously need a mortgage loan that's going to help you buy this house. Now the thing is, even though it's a sales price of $500,000, you still need a down payment. So if it's a $500,000 home, you can't get a loan for $500,000. You still need to put money down. Now there are three of the most common types of loans to get. There's conventional, VA, and FHA. VA is only if you've served in the military or if you're active duty, so unless you've served in the military, you will not qualify for a VA loan. So the two most common types of loans to get are a conventional loan and an FHA loan. For the sake of this video, I am going to be talking about a conventional loan just because it is the most common type of mortgage loan to get. Now, the biggest misconception is that you need 20% down to purchase a home. You do not need a 20% down payment. However, I will advise you that if you do have a 20% down payment, it is going to give you a more favorable monthly payment and probably a more favorable interest rate depending on your credit score and other things like that. For the sake of this video, we're going to pretend that you have 20% down. And you might be wondering, what is 20% down? For example, we have a $500,000 home. 20% of that would mean you have a $100,000 down payment. Usually on a conventional loan, you can put down less than 20%. You can put 15% down, 10% down. I think you can even go down to 5%. Always check with your lender if they'll allow that. Some lenders allow it, some don't, so just make sure to check with your lender if they'll allow as little as 5%. Since you have a $100,000 down payment, you're not getting a mortgage loan for $500,000. You're getting a mortgage loan for $400,000. And you might be wondering, what is my monthly payment on that? You can use our good friend Google, type in mortgage calculator, type in your loan amount for $400,000, and there is a general interest rate that automatically populates on the Google mortgage calculator. It's 3.92%. but I would say that's a bit high for today's going interest rates. I would say the average going interest rate is around 3%, give or take. So we'll put 3% down just for the sake of this video. And then there's different loan terms you can get. You don't have to get a 30-year loan. You could get anywhere between 25, 20, 15, but most borrowers only qualify for a 30-year loan because it gives you the lowest monthly payment. So when we type in a $400,000 loan amount at a 3% interest rate for 30 years fixed, you have a monthly principal and interest payment of $1,686. Please, please, please keep in mind that this is not the only monthly payment that you will be making. You have to pay your property taxes and homeowners insurance as well. You might be wondering, well, how much are your property taxes? So property taxes vary depending on the exact city, location, and zip code of the home. You can usually ask the real estate agent or look it up on Zillow and it'll give you a rough idea of how much the annual property taxes are. So for example, the annual property taxes in California are on average around $8,000. I've seen much less and I've seen much more. For the sake of this video, we're going to use $800,000 and we're going to divide it by 12 because there are 12 months in the year. And that gives us a monthly property tax payment of $666. We're going to take this number and add it to the principal and interest payment of $1,686, and that gives us a total of $2,352. Please, please, please keep in mind that this is not still the only monthly payment that you will have. You have to take into consideration homeowners insurance. Homeowners insurance is on average around $110 per month. So in total, we are looking at a monthly mortgage payment of $2,462. This includes principal, interest, taxes, and homeowners insurance. One other thing I do want to bring up is HOA due. So if you're looking to buy like a single family residence, then oftentimes the HOA fee will be very minimal, or there might not be an HOA fee at all. I would say with single family homes, the most I've seen an HOA would be $200 per month. However, if you're looking to purchase a condo, oftentimes 90% of the time there is an HOA fee and it's usually more expensive. I would say closer to around $250 to $400 a month. I've seen HOA fees up to $900 a month, which is absolutely insane, but that is something you'll want to anticipate that you might have to include in your monthly mortgage payment. So I hope this video was helpful. I hope this explained exactly what a mortgage is, your monthly mortgage payment would entail. If you found this video helpful, if there are any other questions that I didn't address in this video, feel free to leave a comment down below. Again, I will be doing other videos on other topics that might come up in the home buying process and the mortgage process. So this isn't the only video that I'm going to be putting out. I will have other informational content planned for you all. So again, thank you so much for watching this video. Please give my channel a subscribe, and until next time, I will see you in another video soon. Bye.